I managed the portfolio in that role for around 10 years.
Oh,
Got 4,000 plus clients. Artificial intelligence and machine languages are being used. Big data is being used, and how say senior leadership can influence entire say organization for achieving those visions and
goals.
objectives.
Yes, yes. Hello and welcome everyone to FaceTime with Leaders, a podcast series brought to you by Directors Institute World Council of Directors. And today we're thrilled to have a true powerhouse in the world of finance with us. A leader whose career spans over 25 years, Mr. Dwijendra Nath Jha has not only navigated the complexities of the banking world but has redefined what it means to lead with vision and precision. Currently serving as Senior Vice President at Axis Bank, Mr. Jha has been instrumental in shaping the credit risk management landscape, driving substantial growth and ensuring that portfolios remain not just profitable but also secure. His work has influenced major sectors ranging from steel and mining to oil and gas and helped businesses across India scale new heights of success. But it's not just his technical expertise that stands out. It's his remarkable ability to balance strategic insight with a hands on approach that has made him a true innovator in financial management. From building portfolios worth thousands of crores to pioneering risk management systems, Mr. Jha has truly mastered the art of navigating today's dynamic financial ecosystem. Sir, it is an absolute honor to have you with us on the show today. Thank you so much for taking time out and joining us on FaceTime with Leaders.
Thanks a lot, Tanay. And it is I am also excited for this interview, and I am looking forward to share my journey, my professional journey, say from an engineer in steel plant to risk management person in a financial bank and financial institution. So I look forward for it.
I think it's going to be a very interesting journey, and we can't wait to look forward to it because your career journey is nothing short of fascinating, right, sir? I mean, starting at Visakhapatnam Steel Plant, navigating through a range of roles, and now leading credit risk management at Access. I'm sure there have been many defining moments. Could you share with us a few of those key experiences or turning points that not only helped shape your career but also gave you valuable lessons that continue to guide you? We'd love to hear the story behind your journey.
So let me begin with my journey with the steel plant. So as a young engineer, I joined there, and the plant was young, the workforce was young, and there were sometimes the issues of union activism also. But I kept it simple. So I made them understand that those who will do work, they will be recognized, and disruptors will also be recognized in the same way. And with this approach, I won their confidence. We did many remarkable emergency jobs. I was in a maintenance function. So we did remarkable jobs because it was a process industry, and any disruption would have led to disruption in production and all lines. So I could enjoy the confidence of my workers. There were around 50. In my beginning of my career itself, I led a team of 50 persons, many of whom were unskilled also. Then, due to my fascination for financial sector, I moved to SIDBI. And in SIDBI basically does MSME financing, and MSMEs are growth drivers, in my opinion. After serving in the MSME space for so many years, I do feel that they are the real growth drivers because they generate a lot of employment and all. But then there were challenges associated with MSME financing. But SIDBI was having solutions for them based on transaction. Bill discounting facilities were there, and we did lot of business in this space, which helped MSME units in getting liquidity in time. So this helped them, and we did business of 1200 to 1400 crore throughput during these days, during those days itself. Okay. And SIDBI was also pioneer in project finance.
Okay.
Project finance is important from an economic perspective because it leads to investment. Ultimately, that investment itself will lead to economic growth, GDP growth, and say employment generation and all.
Correct.
So we did a lot of project finance also, and say our sourcing and quality was good, health was good, portfolio health was good. Then say after 10 years, spending 10 years in SIDBI, I saw that MSME financing is growing everywhere. And MSMEs were the new darlings of financial sector. And they continue to be.
Yeah. Yeah.
So I moved to a commercial bank, at that time UTI Bank, now Axis Bank. And I am here for last 18 years. In
Oh.
UTI Bank, though I have initially joined as for a business role, but I was asked to take up credit risk role, and I accepted it because during those days credit risk management was new concept, and I thought let us learn something new.
Yeah.
And I managed a portfolio in that role for around 10 years,
Oh.
around 4,000 plus clients, and I was doing both at transaction level as well as at portfolio level. And we ensured good health in portfolio, though our team was very small. We were only 2 3% at any time. While business team was larger, 40 50, it went up to even 100 and all. But we did a lot of work through help of many tools, modern day tools and all, and we ensured that we grow, and we grow at a good pace and with a good health.
Yeah.
So that we ensured. And later I moved to, after spending some time, means a lot of time in risk management, I moved even to business role, and there also we did quite well with both growth as well as health of the portfolio. This
You
is, in
basically, yeah.
nutshell, is my journey, you can say.
You would have seen the credit risk department grow truly from being a baby to like now what it is, right?
Yeah, yeah.
So, in this ever evolving landscape, how does data analytics play a role in helping you navigate credit risk evaluation? And more importantly, how does it influence your decision making when there's so much at stake for both the clients and the institution?
Look, say volume of lending business is growing, so naturally data helps in say streamlining things. Say, with data analytics, lenders have a uniform approach towards credit risk assessment or borrower assessment. If we take a larger picture, so data analytics has helped the bank to develop credit scoring models, credit rating models. Then it has helped in productive analysis also. It has helped in taking care of portfolio health. So data always helps. So even for say compliance and regulatory requirements, data analytics is very handy. Say you can automatically upload your data to the regulator, which is RBI's website. RBI can say with lot of internal data, our internal rating tools get validated through RBI. So these are advantages of data analytics. And there many tools are evolving, which we can discuss later also in this interaction. But having said that, data analytics is indeed playing a role in credit risk management. But I do go by my own intuition also sometimes, because in data analytics we normally use historical data, whereas sometime say I have to take a forward-looking call based on some other, say, market information,
Yeah.
potential of the business. So at that point of time, definitely I used to use my intuition, say, my experience. So that also helped, and thankfully, my calls have been always, say, for the better only.
Yeah, and very well said, sir. Data analytics is there, but the power of intuition and something that one uses with their experience is something that is always completely beneficial.
Yeah.
Sir, you've played an instrumental role in growing Axis Bank's loan book by over 50% in just 1.5 years. What strategies did you put in place to achieve such impressive growth while maintaining the health of the portfolio?
Say, to put it simply, the strategy was keep it simple. Most fundamental thing in banking business is relationship management.
Yeah,
So what I told my boys, my team members, that look, competition will be there. We have to face the competition, and you can ward off competition only by good, strong relationship management. So that was one part. Say, whenever we were going to customer, we were listening to them empathetically. We were trying to understand what is their requirement, and then we were giving proper solution. So the entire exercise made them comfortable with us. And I also told my team members that look for big, say, slightly bigger ticket size. Increase your ticket size. Say, suppose you are doing 2 crore, try to do 4 crores. So risks are equal. Say MSME means say up to 10 crore, things can be similar. So somebody has grown more, somebody is growing. So we have to take call, and by increasing ticket size also we could increase the pace of our growth.
yeah,
And we because of better relationship management practices, we managed to get timely information from our customers. And information is important in banking sector.
yeah,
Once you continue to get information, you continue to know health of your customer, his business, his profile, all those things. And one more thing is this conventional wisdom is keep your ears and eyes open, have market feedback regularly about the existing customers also, and these all helped in maintaining a good health of our portfolio, and
lovely.
beside growing reasonably well.
So, having been in the financial sector for nearly 25 years, how have you seen the perception of risk change over time, and how do you think this is the future of credit risk management in today's rapidly evolving financial landscape?
Say credit risk management indeed has changed quite a lot. Say when I joined in credit risk function, it was preliminary days. Say Basel norms have come, and banks were supposed to put in place proper risk management with data analytics and all. Lot many things came. It is not like say bankers were doing assessment of borrower earlier also. Say what made difference was more structured way of credit risk assessment. Say
Yeah.
based on pure data, and then now external factors are also coming in credit risk. Earlier it used to be only say borrow, we were analyzing only borrow, we were getting information about them, and then we were trying to, based on their financial matrices, we were trying to take decision, assess risk, or go further. But nowadays, so there are other external factors also, like how particular sector, geography, even global factors are influencing MSMEs. Say suppose Iran war is there,
Mm.
Iran war is there, and say petroleum prices or crude prices are going up and down. So that will influence many MSME players who are into plastic manufacturing. So that way we have to factor external things also, external influences also. So all these changes have taken place. Now more and more, say, artificial intelligence and machine languages are being used. Big data is being used because data size is growing up, and
Yeah.
once data size is growing up, it is more fun, rather fun, I would say, to analyze that data and draw conclusions. So naturally, a lot of changes have happened in credit risk management space, and that is for good only. So, and we are still evolving. More and more tools will come. That is my say. We used to have only conventional data for analysis purpose. Now we can have non-conventional data also, non-published data also.
Oh,
uh, Borrowers social media profile, etc., is also being checked. Their names are searched in text search. so that if any adverse news is there for them, so we can ward off those risks with this method only.
So, looking ahead, what are some of the key milestones you hope to achieve in the coming years? I mean, as someone with such a wealth of experience, what are your aspirations for the future, particularly in terms of stepping into more influential boardroom roles or leading strategic initiatives that could shape the financial landscape?
So definitely, I aspire for more influential board roles. I have experience both industry as well as financial sector, and especially risk management is the keyword nowadays.
Yeah.
So I have a lot of experience there. So I do see, so whether I am in this organization or any future organization, I can help, especially MSMEs. I have handled trade and forex businesses also, and that is another big opportunities for MSMEs. Now India is poised to become slowly more and more export power.
Yes.
So export is growing. So and MSMEs have a lot of role in that. So there I can be helpful, and I do see that I do aspire that I get a more influential role. This is my
Yeah.
aspiration.
Sir, with your extensive experience in credit risk and portfolio management, how do you see corporate governance influencing the risk management strategies of organizations today? And in your view, what role does effective governance play in ensuring long term financial stability, especially when managing diverse and high stakes portfolios like the ones you've handled?
Say both for lenders as well as any corporate, both corporate governance and risk management are intertwined. So what is corporate governance? Making strategy, making vision, transparency, sustainability, all these things are there. And for that you need to have good risk management practices in place.
Yeah.
Risk management is no different from corporate governance. It has to be part of, or it will go along with corporate governance. No corporate governance is complete without risk management. And in corporate governments, things can be aligned by having, say, regular risk assessment and strategy, review of those processes, then making changes wherever necessary. Suppose new risks are coming, new regulatory compliance need is coming, all those things. Say, regulatory risk is also a risk. So all these risks are to be covered, and this can be done only through proper interaction between the risk management team and the board of directors.
Yeah.
Board of directors, they do take inputs from, say, audit committee or risk committee to assess where exactly we are heading. Are we aligned with our strategy and vision? Are there any risk issues which needs immediate or medium term, long term attention? So all these, so I would say that corporate governance and risk management are complementary to each other, and they have to work in tandem to ensure long term sustainability of corporates.
Yeah. Very well said, sir. So you've been a part of Directors Institute for a while now. Could you share what has stood out most to you in your ongoing experience with the institute and how has it contributed to your personal and professional growth?
So look, thus far I have been mostly in execution roles, though I do aspire to be more influential, including boardroom positions.
Yes.
So directors, this course definitely has made me aware about more aware about vision and strategy, their importance, how important, say, and how, say, senior leadership can influence entire, say, organization for achieving those visions and
Goals.
objectives of the
Yes.
corporate.
Yes.
And that way, course is very beautifully designed. I am enjoying it. I am getting new knowledges, and I'm basically engineer, so I am getting more inputs towards corporate governance, sustainability, and all. So that way, this course is definitely helping me, and I am sure that this course will help me in, say, achieving more greater responsibilities, I would say.
Yeah. So it's been an absolute pleasure having you on the show today. Your insights on credit risk management, leadership, and your personal journey have truly been inspiring. You've demonstrated how a blend of experience, vision, and continuous learning can actually lead to remarkable success. And I'm sure our listeners have gained a wealth of knowledge from your expertise. So thank you once again for joining us today, and wish you all the best for the future. Thank you.
Thanks a lot. Thanks.
To our listeners, thank you for tuning in to another episode of FaceTime with Leaders brought to you by Directors Institute. Until then, keep pushing boundaries, embrace new challenges, and remember the journey is as important as the destination. Thank you so much.